it's ugly out there, and we're going to continue to see weakness in commodity prices. It's not just the ones that everybody pays attention to, WTI crude, Brent crude, gold prices, but take a look what's going on in the grain market. It's making new lows. Very good crops out there right now, good weather, absolutely perfect weather. That's weighing on those prices, but the overriding fundamental is China. China has difficulty. You just talked about the fact that the stock market there was down 8% overnight. It's down, what, I think 25 or 30% from its highs. It's still up dramatically for the year, but well off its highs. The government is doing everything that it can to try to prop up stock prices, and thus far it has been utterly unsuccessful in doing so. Usually government intervention ends badly, and this does not look pretty. Yeah, well, you can say that again. But, Dennis, we've had guest after guest on this morning. When we show this chart, don't stress about that. That's not telling us anything big here. Overall, things are going to be fine. Don't be frightened of what's happening. Do you buy that? No, I really don't buy that. I think that we've had some problems here in our stock market for the past month and a half. I think China had been a leader to the upside. You're seeing divergences within our stock market where the advanced decline line, for example, wasn't making new highs as the stock market itself was making highs. Those sorts of things are disconcerting. The amount of margin that has been borrowed in China and here is disconcerting. I think you have some difficulty in stock prices, so other people may disregard or tell you to pay little attention to what's going on in China. I tell you to pay a great good deal of attention to what's going on in China. So what are you doing here? Are you raising cash? Are you putting any money to work in it? Are we close to a bottom in any of these things? No, I'm afraid that we're probably not close to a bottom. I think we're closer to the top. And I hate to say that because, as an old friend of mine once said, bears don't eat. It's much more fun to have a bull market than it is to have any incipient movement in a bear market. But I'm afraid that with the bond prices starting to go higher, with rates beginning to go lower, with commodity prices all generally trending downward, it is very difficult to put together a bullish case for stock prices. 2 weeks ago, 3 weeks ago, I was quite bullish with stocks, and now I see a lot of reasons to be at best neutral of stocks here in the United States, and even slightly bearish of them. Hey, Dennis, did you see Tom Leon earlier giving us the sort of 1904 analogy, saying we're going to miss it? First half looked sort of like nothing, but if history repeats, and sometimes it does, that maybe actually equities are in good shape. Plus, he made the argument that multiples have actually come down. Well, I hope that he's right. It would be a nice thing to think that he shall be right. I'm fearful that he won't be right. As I said, bears don't eat. It's not fun to be bearish of stock prices, but I'm afraid that I think it's time to be at least at best neutral. I think the best thing to do is quietly go to the sidelines and allow the circumstances in Europe and allow the circumstances in China to wend their way through, to clarify themselves. But right now, it's a little ugly out there.